Have you ever stared at your trading screen, heart racing, and thought, I'm so close, yet I keep losing. Why can't I just get this right? I know that feeling. I've lived it. Every crushing loss, every almost win that slipped through my fingers. I've spent nights staring at charts, convinced that if I just found the perfect strategy or indicator, everything would change. But here's the truth. It never did. Not until I realized that the missing piece wasn't in the market. It was in me. There's a moment, subtle and quiet, that changes everything. One day you stop reacting to every tick and every headline. You stop chasing that next big win or trying to guess the market's every move. Instead, you start focusing on what you can control. Your decisions, your discipline, your mindset. That's when the fog lifts. That's when trading stops being a roller coaster of fear and hope and starts becoming a game you can actually master. This book is about recognizing that shift, the 7 signs that tell you you're finally becoming a profitable trader. Not the sweaty palms glued to the screen trader, but the calm, patient, confident trader who makes decisions with clarity and purpose. I've been in the market for over 20 years. I've blown accounts, made mistakes that burned deeply, and wondered if I even belonged here. And through it all, I discovered this. Profitable trading isn't about predicting the market. It's about mastering yourself. So, if you're ready to finally see the signs, to understand the difference between a struggling trader and a consistent winner, lean in and pay attention. The change isn't coming from the charts, it's coming from you. Chapter 1. You trade with patience, not pressure. Have you ever felt that burning urge to enter a trade just because the market is moving? That fear that if you don't act right now, you'll miss out on the perfect opportunity. Every trader has. It's that moment when your heart races, your palms sweat, and your brain screams, don't just sit there, do something. That's the very pressure that keeps most traders stuck in a cycle of overtrading and regret. I've been there. I remember my early years, staring at charts for hours, clicking the buy or sell button just to feel like I was part of the market action. I thought activity meant progress. I thought more trades meant more money. What I didn't realize was that impatience was the most expensive habit I had. It wasn't the bad strategies that drained my account. It was my inability to wait. Real trading maturity begins the day you learn that doing nothing is sometimes the most profitable decision you can make. I'll never forget a trader I mentored years ago. Let's call him Ethan. Ethan was the kind of guy who couldn't stand still. He had 6 monitors, 3 phones, and caffeine running through his veins like rocket fuel. Every time a candle moved even slightly, he'd jump into a trade. There's momentum. I can't miss this one, he'd say. In the beginning, he was confident, maybe even a little too confident. He'd make a few quick wins and feel unstoppable. But the market has a funny way of humbling those who act out of excitement. Within months, his account was bleeding, not because he didn't know how to trade, but because he didn't know how to wait. I asked him once, Ethan, do you know what your edge is? He shrugged. I don't know. I just trade what I see. That's the problem. When you trade what you see without patience, you're reacting, not executing. You're not following a plan. You're following emotion. We spent months working on one single skill: patience. I made him do something most traders find impossible. Watch the market and not trade. Just observe. No entries, no exits. Just observation. For a while, he hated it. He said it felt like torture. But over time, he started noticing things he'd never seen before. Patterns, repetitions, market rhythms. He started realizing that most of his missed opportunities weren't real opportunities. They were traps, and when he finally began trading again, his results changed dramatically. He wasn't reacting anymore. He was responding. His trading slowed down, his decisions became deliberate, and his equity curve began to rise steadily. He wasn't chasing candles. He was waiting for setups that fit his plan. That's what patience does. It slows your heartbeat down to match the rhythm of the market. Patience in trading isn't just about waiting. It's about what you do while you wait. It's mental discipline. It's learning to let boredom work in your favor. Professionals understand that the market doesn't owe them a trade every hour. They know that high-quality setups are rare. And they're okay with waiting days, even weeks, for one clean entry. Think about it this way. Hunters don't chase every rustle in the bushes. They wait for the right target, at the right distance, with the right shot. Trading is no different. The best traders are like snipers. One precise trade can outperform a week of impulsive ones. The amateur trader wants action. The professional trader wants results. And the biggest difference between the two? One trades for excitement, the other trades for consistency. The market is a master manipulator. It tempts you with flashing green candles and sudden movements that trigger your fear of missing out. This is what we call FOMO, the fear that you're being left behind while others are profiting. But here's the truth. The market isn't rewarding the fast. It's rewarding the focused. You might think missing a move means missing profit. In reality, missing a move often means saving capital. And in this game, saved capital is earned capital. Let's say you open your trading app and see Bitcoin pumping 4% in 5 minutes. You panic. You think, if I don't enter now, it's going to 100K. You enter at the top, the market reverses, and within minutes, you're staring at a red number. Now you're stressed, angry, and ready to revenge trade your way out. That's not trading, that's emotional gambling. Patience protects you from this. Patience allows you to look at that same chart and say, I'll wait for a pullback. You know there will always be another opportunity. The market isn't a one-time lottery. It's an endless series of chances for those who wait for alignment. The greatest traders I've met share one common trait. They're boring. Seriously, they don't chase every candle or talk about every trade. They wait quietly, plan carefully, and execute mechanically. And that boredom, that calm consistency, is their superpower. If you're feeling bored while trading, that's not a bad sign. It's a sign you're growing. Boredom means you're not chasing noise anymore. You're finally becoming selective. You're treating trading like a business, not a casino. In business, patience is strategy. No successful company makes decisions every hour of every day. They plan, they analyze, they execute when the timing is right. Trading is no different. You're the CEO of your trading account. Every trade you place is an investment decision. And like any good CEO, you must protect your capital as carefully as your reputation. But let's be honest, patience is hard, especially when social media makes you feel like everyone's getting rich except you. You see screenshots of traders making thousands in minutes, and suddenly your strategy feels too slow. You start thinking, maybe I should be more aggressive. Maybe I'm missing something. That's where traders destroy themselves, comparing their journey to someone else's highlight reel. You don't see their losses, their sleepless nights, or the times they blew up accounts. You only see the wins they choose to show. Real traders know that profitability isn't about speed, it's about survival. And the only traders who survive are the ones who can wait. When I look back at my own journey, the turning point came when I realized I didn't need to trade every day to make money. I just needed to trade well. Some of my most profitable months came from taking just 2 or 3 high-probability trades and sitting patiently for the rest. One month, I remember waiting almost 3 weeks for a setup on EUR/USD. Every day I checked the chart, every day I saw nothing I liked. It was painful. My instincts told me to just try something, but I held my ground. Then, on a random Wednesday, the pattern I'd been watching finally aligned. The trade triggered. I entered with confidence. Within 2 days, it hit my target and made more than I'd lost in the previous month. That one trade paid for my patience. You see, the market rewards those who respect time. If you force trades, you're disrespecting time, and the market punishes impatience brutally. There's a saying in trading, amateurs focus on making money. Professionals focus on protecting it. Patience is protection. It's the invisible shield that keeps you from self-destruction. Every time you wait for confirmation, every time you skip a bad setup, every time you hold back from chasing, you're building the habits that define a profitable trader. It's not the flashy wins that make you successful. It's the boring, consistent discipline behind the scenes. Think of trading like fishing. If you cast your line into the water and pull it back every 10 seconds, you'll never catch anything. But if you throw it in and wait, really wait, you give yourself a chance to let opportunity find you. That's patience. The funny thing is, once you master patience, trading becomes easier, almost peaceful. You no longer feel the need to force trades. You start enjoying the process instead of chasing results. You realize that your job isn't to predict the future, it's to prepare for it. Patience gives you power, power over your emotions, power over your decisions, power over your results. So the next time you feel that urge, that itch to enter a trade because something might happen, pause, take a breath, remind yourself that waiting is a decision too, not trading is trading. When you learn to sit on your hands while others panic, when you learn to say no to noise, and when you start to enjoy the quiet between trades, that's when you'll know you're no longer trading with pressure. You're trading with patience, and that's when you'll start to win. Not just in trading, but in mindset, discipline, and life itself. Discipline and life itself. Chapter 2. Losses don't shake you anymore. Have you ever felt that tight knot in your stomach after a trade goes against you? That moment when your mind races, your heart pounds, and you start replaying every decision, asking yourself, what went wrong? Almost every trader has been there, especially in the early stages. Losses are brutal, not because the market is unfair, but because we take them personally. We attach our ego, our self-worth, and our identity to the numbers on the screen. I remember my first big loss vividly. I had a trade that I was sure would go my way. Every signal, every chart pattern screamed yes. But the market had other plans. Within minutes, I watched as my account dipped into the red. Panic set in. I made a series of impulsive trades trying to win back what I lost. By the end of the day, my account was in worse shape than before. I wasn't just losing money. I was losing control of myself. It was a painful lesson, but a necessary one. The turning point came when I realized that losses are not personal attacks. They are information. They are data points that tell you something about the market, about your strategy, or even about your own behavior. When I reframed losses as lessons instead of failures, something remarkable happened. The fear, the anxiety, and the anger that used to consume me began to fade. I started seeing red days as opportunities to learn, adjust, and improve. There's a psychological shift that separates struggling traders from consistently profitable ones. The former take losses personally, letting emotions drive their next moves. The latter see losses as a natural part of the game, like a coach reviewing game tape after a tough match. When you stop equating your account balance with your self-worth, you gain freedom. Emotional stability becomes your edge. I want to tell you about one of my students, Lisa. Lisa was bright, intuitive, and highly analytical, but she had a problem common to many traders. She couldn't handle losing trades. Every time her account showed red, she would spiral. She'd blame herself, the market, the broker, anything but the process. Her trading became erratic. She overcompensated, overtraded, and exhausted herself mentally. Her strategy was solid, but her emotional reaction destroyed her results. We worked together on reframing her mindset. I taught her a simple exercise. After a losing trade, write down exactly what happened. The entry, the exit, the market conditions, and the decision process, without judging yourself. The goal wasn't to punish, it wasn't to feel bad, and it wasn't to dwell. It was to collect information. At first, she resisted. "It feels weird not to react," she said. But over a few weeks, something changed. She started to see patterns in her losses. Some trades were unlucky, but within her risk parameters. Others highlighted areas of improvement, like entering too early or ignoring key signals. She stopped emotionally reacting and started objectively analyzing. Within months, her performance stabilized, and she became more consistent than ever. This is the essence of trading maturity. Losses don't shake you anymore because you know they are part of the process, not the verdict on your skill. The market is neutral. It doesn't care about your plans, your feelings, or your expectations. Once you internalize that, you're free to focus on what matters. Executing your strategy consistently. Another aspect of mastering losses is understanding the role of risk. One of the biggest mistakes new traders make is ignoring proper position sizing. They risk too much on a single trade and then feel the sting of a large loss personally. When you manage risk effectively, losses are smaller, less stressful, and easier to process. They no longer carry the emotional weight that used to paralyze you. Risk management isn't just about protecting your account. It's about protecting your mind. Let me share a story from my own trading career. There was a time when I was trading a volatile market without proper stops. One sudden move wiped out a significant portion of my profits. In the past, I would have panicked, revenge traded, and probably wiped out even more. But by then, I had learned to detach emotionally. I acknowledged the loss, analyzed what went wrong, and moved on. That one event taught me that surviving losses calmly is far more valuable than trying to avoid them entirely. Many traders also struggle because they compare themselves to others. Social media is full of screenshots of huge wins, and it's easy to feel like you're failing when you're having a red day. But remember, you are not measuring your performance against highlight reels. Profitable traders know that consistency over time beats one-off gains. They understand that losses are temporary and inevitable, but controlled, analyzed, and learned from. The psychology of staying calm after red days cannot be overstated. It's a skill, and like any skill, it can be trained. Start by developing a routine for processing losses. Step away from the screen, take deep breaths, journal what happened, review your trade objectively. Ask yourself, did I follow my plan? Did I manage my risk? Did I learn something? Avoid impulsive decisions. Let the information guide your next move. A powerful technique I recommend is the next trade mindset. After a loss, instead of dwelling on it, immediately shift focus to preparing for the next opportunity. Analyze the market with curiosity, not regret. This mental shift keeps you proactive, not reactive. It prevents losses from snowballing into frustration-driven mistakes. Here's the hard truth. No trader escapes losses. Even the most successful ones do not have perfect records. The difference is that they internalize losses as data, not drama. They don't let one red trade define their day, week, or month. They understand that trading is a marathon, not a sprint. Emotional resilience becomes their competitive advantage. Let's also address the common mistake of revenge trading. After a loss, many traders feel the need to win it back immediately. This is almost always a recipe for disaster. The mind is not in a logical, disciplined state after a loss. It's driven by adrenaline and emotion. Waiting, reflecting, and analyzing is far more profitable than chasing a quick recovery. One practical exercise I use with my students is the loss reflection log. Each time they experience a loss, they write down the exact market conditions, their decision-making process, and what they learned. Over time, patterns emerge. They start seeing recurring mistakes or noticing that some trades are simply part of the statistical ebb and flow of the market. This exercise transforms fear into knowledge, stress into strategy. I remember a student, Raj, who initially dreaded seeing his trades in red. But after 6 months of consistently logging losses and reflecting objectively, he started to anticipate market behavior more accurately. He understood the difference between bad luck and avoidable mistakes. The emotional storm that once followed losses became calm, and his trading account began to reflect that stability. Another key aspect is accepting responsibility without blame. Profitable traders don't blame the market or brokers for losses. They accept what happened, analyze it, and move forward. This mindset is liberating. It removes excuses and focuses energy on what's actually controllable. Your strategy, your execution, your risk management. Losses also teach patience. When you stop fearing them, you stop forcing trades. You wait for setups that meet your criteria. You stop chasing excitement and start seeking alignment. This patience leads to better entries, higher win ratios, and ultimately, more sustainable profits. In essence, the moment losses stop shaking you is the moment you've evolved as a trader. You are no longer at the mercy of emotion. You are no longer a reactive participant. You've developed the calm, steady mindset that separates amateurs from professionals. Remember, the market is neutral. Your losses don't define you. They inform you. They guide you. They are the raw material from which profitable trading is built. When you learn to detach emotionally, analyze logically, and accept losses as part of the journey, you are no longer just trading. You are mastering the art of profitable decision-making. By the end of this chapter, I want you to internalize this. Your account is not a reflection of your worth, and every red trade is a lesson, not a verdict. The calmer you are in the face of losses, the more consistent your profits will become. Emotional stability equals profit stability. That is the mark of a trader who has truly arrived. And once you embrace this mindset, the market no longer terrifies you. Losses become stepping stones. You trade with confidence, clarity, and control. You are finally becoming the kind of trader who thrives, not just survives. Who thrives, not just survives. Chapter 3. You think in terms of risk, not reward. Have you ever jumped into a trade, your mind buzzing with thoughts of profit? You imagine the numbers growing, the thrill of winning, the satisfaction of beating the market. You might ask yourself, how much can I make today? It's an exciting mindset, one that almost every amateur trader has experienced. But here's the truth. This is the exact mindset that keeps most traders from ever becoming consistently profitable. Early in my trading career, I was obsessed with potential gains. I would enter trades based on excitement, hype, or a gut feeling, always asking, what's the upside? I rarely stopped to consider the other side, the downside. Every time a trade went against me, I was blindsided. My losses felt catastrophic because I hadn't thought about them before putting money on the line. I was gambling, not trading. The first moment I truly understood the concept of thinking in terms of risk came during a particularly brutal week. I had taken a series of trades in the Forex market without proper position sizing or stop-loss rules. One sudden move against me wiped out nearly 20% of my account. I felt devastated. I replayed every decision, questioning my skills and my judgment. But then, as I sat down to reflect, I realized something crucial. I hadn't calculated my risk. I had only imagined the reward. That was my mistake. This is the defining difference between amateurs and professionals. Amateurs ask, how much can I make? Professionals ask, how much can I lose? It's a mindset shift that changes everything. When you start thinking about risk first, reward second, you protect your capital, your confidence, and ultimately, your ability to survive long enough to win consistently. One of my students, Mark, experienced this firsthand. Mark was smart and analytical, but he was trapped in the same reward-first mindset. He would jump into trades, often risking more than he realized, chasing the thrill of quick gains. When losses piled up, his confidence crumbled. We started working together on the concept of risk per trade and position sizing. I asked him to calculate, before every trade, exactly how much he could afford to lose without jeopardizing his account. At first, he was skeptical. I'll make less money if I risk less, right? He asked. I smiled and explained that the goal isn't to make the most money on every trade. It's to survive and stay in the game. Once he adopted this mindset, everything changed. He began to see losses as manageable, not terrifying. He could trade calmly, with a clear strategy, knowing that even if a trade went wrong, he could recover. His consistency skyrocketed, and soon his profits followed naturally. Thinking in terms of risk is not just about surviving losses. It's about leveraging probability. Trading is a numbers game. Every setup, every signal, every pattern carries a probability of success. The key is to structure your trades so that your losses are small, your wins are meaningful, and your overall strategy is aligned with probability, not emotion. I remember a mentor once telling me, survive long enough, and the market will reward you. At first, I didn't fully grasp it. I wanted to win now, not later. But over time, I realized that longevity in trading is the ultimate edge. If you survive loss after loss, manage risk, and stick to your process, you inevitably come out ahead. The math favors patience and discipline. Risk management isn't glamorous. It doesn't feel exciting. It doesn't give you the adrenaline rush of watching a stock spike 10% in minutes. But it is the backbone of profitable trading. Professionals obsess over it. They calculate risk per trade, adjust position sizes, and set drawdown limits before they even look at potential profits. It's not luck. It's deliberate, calculated control over uncertainty. One vivid example from my experience involved a volatile stock that was moving unpredictably. Many traders were jumping in, chasing huge gains. I could have made a fortune if I acted impulsively, but my risk-first mindset kept me cautious. I calculated my maximum acceptable loss, set my position size accordingly, and waited for a clear signal. The market moved, as expected, but not in a straight line. Small fluctuations tested my strategy, but my risk was contained. When the trade finally hit my target, the profit was substantial. Not because I chased it, but because I respected the risk. That one disciplined trade reinforced a lesson I'd never forget. Controlling risk is more powerful than chasing reward. It's easy to underestimate the psychological benefits of a risk-first approach. When you know exactly what you can lose, trading becomes less stressful. You stop reacting emotionally to every market move. You stop panicking when things don't go your way. Your confidence grows because you know that no single trade can destroy your account, no matter what happens. Another common mistake is ignoring drawdown limits. Many traders focus only on individual trades, but the real danger lies in cumulative losses. Even a profitable strategy can be ruined if you allow losses to accumulate unchecked. Professionals set clear rules: maximum daily loss, maximum weekly drawdown, and maximum allowable loss per trade. These limits create a safety net. They protect both your capital and your mindset. I coached a trader named Samantha who initially ignored drawdown rules. She could spot setups perfectly and had a profitable strategy on paper, but she consistently blew her account after a few bad trades in a row. When we implemented strict drawdown limits and defined risk per trade, her results stabilized. Her account grew steadily, not because the trades changed, but because her approach to risk changed. She learned to respect the market, not challenge it blindly. The invisible edge of thinking in terms of risk is consistency. By prioritizing risk, you reduce emotional decision-making. You stop overtrading, revenge trading, or chasing losses. You develop patience and discipline. You follow a process that is repeatable and scalable. Over time, this consistency compounds, just like interest in a bank account. And that's where long-term profitability comes from. Let me tell you a story that highlights this perfectly. I once traded a currency pair that was extremely volatile. Many traders around me were excited, shouting about the massive potential gains. I stuck to my risk parameters, calculated my position size carefully, and entered only when all conditions aligned. The market swung wildly, testing my stops multiple times. Other traders panicked and exited, some suffering huge losses. I remained calm, within my risk limits, and the trade hit my target. My profit was solid, yes, but more importantly, I had stayed disciplined. That experience reinforced a fundamental truth. Respecting risk first allows you to act confidently, even under pressure. Understanding risk also transforms how you view reward. When your losses are controlled, every potential gain becomes a bonus, not a necessity. You stop feeling desperate to hit targets and start enjoying the clarity of well-planned trades. You realize that survival and consistency are more valuable than momentary excitement. Another key aspect is risk-reward ratio. Every trade should have a defined target and stop-loss. If the potential reward is smaller than the risk, it's not a trade. It's a gamble. Professionals evaluate this ratio carefully before committing capital. They don't take trades because they feel right. They take trades because the numbers make sense and the probability favors them. I remember mentoring a young trader, Jake, who struggled with risk-reward thinking. He would enter trades where the reward was minimal, but the risk was high. It felt exciting, but it was unsustainable. I had him backtest his trades and calculate risk-reward ratios rigorously. Over time, he began selecting trades where the potential reward justified the risk, and his account grew steadily. He learned that thinking about risk first doesn't limit opportunity. It enhances it by filtering out low-probability setups. In trading, survival is everything. You can have the best strategy in the world, but if you don't manage risk, you won't last long enough to realize its potential. By thinking in terms of risk first, you protect your account, your confidence, and your ability to make rational decisions. You stop gambling and start trading like a professional. The transition from reward-focused thinking to risk-focused thinking is not instantaneous. It takes practice, reflection, and self-discipline. Start by asking yourself before every trade, what is my maximum acceptable loss? Can I live with it? Does this trade fit within my risk parameters? If the answer is yes, proceed. If not, step back. Every disciplined decision compounds over time, building a foundation of consistent profitability. Remember, the market is unpredictable. You cannot control outcomes, but you can control your exposure. By prioritizing risk, you give yourself the freedom to act logically, calmly, and confidently. You no longer fear the market. You respect it. You no longer chase wild gains. You seek calculated opportunities. When you think in terms of risk, you become the trader who survives, who grows, who learns. You become the trader who doesn't panic in a losing streak, who doesn't over-leverage, who doesn't gamble blindly. You become the trader who turns probability into profit and uncertainty into opportunity. And that's the real sign that you're finally becoming a profitable trader. When your focus shifts from chasing money to managing risk, you gain control. Control over your decisions, your account, and ultimately your destiny in the markets. It's not about how much you can make in a single trade. It's about how consistently you can protect and grow your capital over time. You can protect and grow your capital over time.